Hey everybody, Smart Silver Stacker here. Hope you're doing well. So the silver price did something today which indicates that there's some big changes afoot for the precious metals. The signal that silver is sending is something that silver stackers definitely should have on their radar, and we're going to get into it in today's video. So let's get to it. Before we get started today, I do just want to say a big thank you for tuning into my video. If you enjoyed and you get some value from it, please do give it a big thumbs up down below. And while you're at it, why not subscribe to the channel? Did you know SD Bullion is giving away a monster box of 2024 Tree of Life silver coins? Sign up today at sdbullion.com/sweepstakes. All right, so let's talk about what happened with the silver price today, because it does indicate that there are some important changes afoot in the precious metals markets. Now, first of all, the silver spot price today rose as high as $32.95. Now, that is notable because it is the highest intraday price for silver spot over the past 12 years. At the time I'm recording this video, I think silver is about flat on the day. So silver wasn't able to hold on to those gains. So what's the big deal? Well, the big deal is that today we got a very strong jobs report for the month of September. Earlier this morning, the non-farm payroll data for September was released, indicating an addition of 254,000 jobs to the U.S. economy last month. That is massively in excess of expectations. And on top of it, the previous 2 months were revised higher. Now, I will agree with many of you that this is likely a result of the numbers being manipulated to the upside. The current administration certainly has plenty of incentive to do so, given the fact that there is an election right around the corner. And if you delve into the numbers, this is not the super strong report that the headlines would tell you. A lot of this had to do with the addition of new government jobs, which I don't think is necessarily a good sign for the economy. And also, at the same time, the number of multiple job holders has risen to a record high. So the fact that citizens are being forced to go out there and work multiple part-time jobs just to make ends meet due to inflation, that's not a particularly strong sign for the economy. But the reason that this report is so critical and silver's reaction is so important is that silver did not sell off in a big way on this news. Now, initially, when the data was released, the price of silver did drop. It dropped as low as $31.48. Now, I had forecast earlier this week that we would see a major sell-off if we got a blowout jobs number like we got, and I had anticipated we would get a strong jobs report for exactly the reason that the election is right around the corner. However, the drop to 31.48 was very short-lived, and then, as I mentioned, silver rose to a record intraday high of the highest level in over a decade. So the reason that this is so important is because despite the fact that, as I've mentioned, I think this jobs report is really just painting a nice picture of an economy that is in serious trouble, still, the impact on the anticipation of what the Federal Reserve is going to do next in terms of monetary policy was significant. And that's the reason that we've had this dynamic in the silver and also the gold market over the past several years, where when you get a strong economic report like we got today, you tend to see the price of silver decline, because when there is strong economic data, it means that investors are of a mind that the Federal Reserve will be less likely to ease. And in fact, if we look at the CME FedWatch tool, you can see that following this jobs report, the anticipation of a 50 basis point rate cut is now completely priced out of the market. Now, a small percentage of investors are anticipating that the Federal Reserve will in fact pause at the next FOMC meeting and will not cut at all. And yet, despite that fact, the silver price is being very resilient today. So if that dynamic has changed, the good news is bad news and bad news is good news dynamic for the precious metals, it leads me to believe that we may be on the verge of some very interesting price action with gold and silver. Now, why did this dynamic change today? Why didn't silver sell off in the face of this strong economic report? Well, I suspect that it has something to do with the fact that the other fundamentals for silver have simply become overwhelming factors in its favor, such as the fact that there is a significant physical deficit in the silver market. Every year, we're consuming hundreds of millions of ounces of silver that aren't being replaced by mining and recycling. So the supply and demand fundamentals are there, but also right now there is a huge amount of geopolitical risk being priced into safe haven assets like gold and silver. Now, this isn't a video about the Middle East or the war there, but it is important to note that the situation, as we are speaking, continues to deteriorate. Israel has launched airstrikes into Syria now. They are continuing their movement into Lebanon. Today, there was a drone strike on IDF forces launched out of Iraq. And earlier today, the US and the UK launched airstrikes on Yemeni positions. I think 14 airstrikes is what I read. And there's probably a lot more developments in the Middle East, but it's too much to cover in a video that is not strictly dedicated to that purpose. But suffice to say, there is a strong safe haven appeal for hard assets like physical gold and silver bullion at the moment, which I think is part of why the price is supported despite the fact that we got these jobs numbers. And on that geopolitical note, it does appear that we are potentially about to be drawn into a direct war with Iran in one way, shape, or form. You've also got at the end of this month, the BRICS meeting in Russia, where Iran will be taking part. They are a BRICS member now. And the fact that global tensions are rising the way that they are, we're witnessing, daily escalations now, indicates to me that we may see a greater push, an accelerated push towards de-dollarization at that meeting in Russia in just a few weeks. And that may also be putting a floor under the price of hard assets like gold and silver. Also, consider this, that despite the fact that the Fed did have an outsized hike of 50 basis points at the last FOMC meeting when they began their easing cycle, now we are seeing, what you might consider some signs of strength in the US economy. I don't necessarily know that I buy that, but to whatever extent there is some truth to this economic strength, that means that the Fed is easing into a stronger economy, and that could mean that inflation is about to absolutely explode. And that would in some ways be a positive thing for both gold and silver. And I think one additional factor that, if it's not weighing on the minds of investors, should be, is the absolute explosion in the levels of US deficits, which are basically the only thing propping up the economy at the moment. In fact, if you go to the US Treasury debt to the penny site and you look at the data from September 26th through October 2nd, that's the most recent date on there, the US national debt has increased by $381 billion over that span of 6 days. So that's a deficit of $63.5 billion per day over the course of that period of time. If you think about that, that's a pretty amazing level of borrowing that is occurring at the federal level. In fact, if you annualize that level of deficit spending, which, maybe isn't entirely fair because it's not like every day they're borrowing $63.5 billion, but for 6 days in a row they did, that would give you an annual deficit of $23 trillion. So again, maybe not the most based in reality comparison. I don't necessarily know that you need to annualize this spurt of borrowing, but at the same time, we're about to head into a major, at the very least, regional war in the Middle East. What kind of deficit spending is that going to entail? A war is one of the biggest impetuses for borrowing, and I think you're about to see the deficit, which is already at eye-watering levels, explode much higher. And that is, again, another factor, I believe, which is putting a floor under the price of silver. And one final thing to wrap up with here, I think that, if you're seeing the odds of the Fed cutting going down, and you're seeing this positive economic data, and yet you're seeing the silver price rise in spite of that, what does that indicate will occur when we start getting negative economic data again, and the Fed really has to return to a program of not only rate cuts, but possibly even direct debt monetization and QE? I mean, that seems certainly within the realm of possibilities in light of how much borrowing is actually occurring. The central bank may be brought in to enable that level of borrowing here at some point. And the reaction in the silver price and also in the gold price to such an event, I think, will be absolutely explosive to the upside. But let me know what you think in the comments down below. Did today's price action in silver indicate a major change in the dynamics that we are witnessing in the precious metals markets? Love to know what you think. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.